Okay, and welcome back, students who are taking financial accounting, and we're continuing on with the Chapter 2 problems, Group B, that were assigned, and we're going to pick up where we left off with problem 40. Okay, and so if you recall in the previous video, we had journalized the transactions, so I kept them on the slides here, and this is the transactions that we created for a journal. All right, let me get my pen here. So we did these transactions. So we journalized the transactions. Now it said to open T accounts for the ledger accounts. It says here, open T accounts for the ledger accounts listed in the trial balance and enter their beginning balances at January 15th. Use the 4-column account format illustrated in the ledger. So what they're calling T accounts, they're actually using a 4-column ledger account. All right. And in the previous video, I had, let's go up here. I had explained that this would be a debit column, this would be a credit. I had gone over, a simulation of doing one particular ledger account, but because of time and space and things like that, I had said that I was going to opt for just creating T accounts. So I need one for cash. I need one for accounts receivable. I need one for supplies, equipment, accounts payable, common stock, dividends, and like I had said in the previous video, they're not showing retained earnings in the instructions. Okay, if you're looking here, okay, I mean, what's a trial balance? A trial balance is nothing more than your ledger accounts and the balances in the accounts. We'll notice that I have dividends, but I don't have a retained earnings account. That's fine if you decide not to put a retained earnings account. However, I would start thinking along the lines of having a retained earnings account, because you're going to end up moving your revenues and your expenses, that profit or loss, to your retained earnings account. So even though we're not going to use one in this particular problem, just start getting accustomed to the idea of having one. Okay, so we have a service revenue, we have a salaries expense, and we have rent expense. Okay, now, and again, I had said that I'm not going to be using dates here just because of time, because of space, but what we what we do first here is we've created the accounts, and now what we have to do is we have to actually put these beginning balances in those accounts. All right. So I'm going to let me get myself here situated just a second. And okay, so for my cash, I have a debit balance of 2,700, and again, that's a beginning balance. I'm not going to put the date January 15th. For accounts receivable, I have a debit balance of 8,000. For supplies, I have a debit balance of 1,000. For equipment, I have 14,600 on the debit side. For accounts payable, I have a credit of 4,500. Common stock, 21,600. Dividends, I had 2,800. Of course, nothing in retained earnings. Service revenue, 6,600. salaries expense, a debit of $2,300, and rent expense of $1,300. Okay, now if you look at this just real quick, if you look at this overall scheme of things, I mean, if you went and added up all of your debits, you added this 2,700, 8,000, 1,000, 14,600, a dividend of 2,800, your salaries of 2,300, and your rent expense of 1,300, you should have a total of this 32,700, because all you're doing is transferring information, okay? And a lot of, I keep on hearing, oh, my debits don't equal credits. Usually it's not in your decision of how you're making the journal entry. And even if you did make the journal entry wrong, debits still have to equal credits. And if you've made a mistake here in math and adding up the numbers or writing the numbers in or choosing the wrong side, your debits have to equal your credits. So you might want to double check yourself. On the credit side, you have 4,500. You have 21,600, and you have 6,600. Okay, and again, those are those three figures, and they should total 32,700. If your beginning balances don't balance, then obviously you can make all the journal entries you want. You're not, debits aren't going to equal your credits. Okay, so we just opened up our accounts. Okay, and the next thing we have to do is we have to actually post the journal entries we made to those accounts. So let's start out with cash. I have a debit of 3,400 and a credit to accounts receivable for 3,400. So debit for 3,400 and a credit to accounts receivable for 3,400. Then I have a debit to accounts receivable for 1,200 and a credit to service revenue. Debit for 1,200 and a credit to accounts receivable for 1,200. Then I have a debit to cash for 2,700 and credit to service revenue. So debit to cash for 2,700 and a credit to service revenue for 2,700. I have a debit to supplies for 400 and a credit to accounts payable. Debit to supplies for 400 and a credit to accounts payable for 400. A debit to dividends for 1,400 and a credit to cash for 1,400. 1,400 and a credit to cash for 1,400. I have a debit to accounts payable for 2,100 and a credit to cash for 2,100. Debit to accounts payable for 2,100 and a credit to cash for 2,100. Oops, wrong way. Okay, and the last three entries here, a debit to cash for 3,800 and a credit to service revenue. 3,800, 3,800. A debit to rent expense for 1,000 and a credit to cash for 1,000. Debit to rent expense for 1,000, credit to cash for 1,000, and a debit to salary expense for 2,400 and a credit to cash for 2,400. 2,400. Okay, so what we've done is now we've posted all of those entries to our ledger accounts. Now realize that if you were using a ledger sheet like this, okay, And I explained this in the previous video, and I know this is a little squiggly and a little convoluted here, so I'm going to erase some of this here just for illustration purposes. Okay. All right. Your beginning balance in the cash was what, 2,700. Okay, so my beginning balance here was 2,700. Now, like I had explained, as I was in the previous video, as I make my entries, each and every entry, okay, I would always be updating my balances in this column. So each and every line, I would have a new balance. If I was going down through, and again, we're looking at the ledger sheet that you should see in your solution, okay, and that's what you should be doing. All right, you should be working the sheet in this manner. It's just a matter of my not being able to do this in a video format so easily. You're going to have papers all over the place. How can I put a computer screen all over the place, right? So, I'm just showing one account here, and yes, right now I'm actually just using a made-up example, but it's to give you the idea that every time I make a journal entry and I post it to the ledger account, in this case we're talking about the cash account, right? I'm going to update my balance. So if I had 2,700 plus what you see on the screen here of 300, that's a debit of 3,000. And then I'd credit 1,500, so now I'd be at 1,500 as a debit. And I'd credit 500 more, so I'd be at 1,000 in the debit column. Then I have a debit of 2,000, so now I'd be up to $3,000. And then I'd have a credit of 3,500, which means if I have a debit of 3,000 and a credit of 3,500, the difference between the two is $500. And since the credit is larger than the debit, now all of a sudden I have a credit of $500, which means my cash account is overdrawn. Okay, so immediately in the next entry, I know I have to make a deposit of $500 in order to cover that overdrawn situation. So now I have a zero balance in the debit column. But that's what you're going to go down and you're going to be doing with each and every posting of the transactions. Me, because of space and things like this, I'm not keeping a running balance in this cash account here. I'm not keeping a running balance, okay? I'm just using the T accounts in order to be able to represent using the ledger, the 4-column ledger sheet like this, okay? But the bottom line is once I've posted all of my entries, now I need to create a balance, okay? So I'm going to add up my debits, and let's just sort of like do this here. So and I'm just going to use cash because, as you can see, cash is the most convoluted one here. I have the most amount of transactions. So on my debit side, I have 0, 0. Let's see, 7 and 4 is 11, and 15 is 26. So that's 2, 4, 7, 9, 12. I have 12,600 on the debit side, and I have, let's see, 5, 9. 1, 2, 3, 4, 5, 6. I have 6,900 on the credit side, and the difference between the two is 5,700. And since my debit side is larger than my credit side, I have a debit balance of 5,700. So that's the balance in my cash account. When I go to create a trial balance, I need to know the balances in the ledger accounts. And again, make sure you're not making mistakes doing your math, okay? It's you can post, double check your math, but your debits are going to have to equal your credits. All right, so let's do accounts receivable just as an example. I have 8,000 and I have 1,200, so I have 9,200 on the debit side and 3,400 on the credit side. The difference between those two is 5,800, and that's a debit because my debits are bigger, right? Okay. For supplies, I have 1,400, so I have 1,400 for supplies. The equipment, I have 14,600. For the accounts payable, I have 2,100 on the debit side, and I have 4,900. Right, I have 2,100 on the debit side and 4,900 on the credit side. and the difference between those two is 2,800. But notice my credit is greater than my debit, so I'm putting it on the credit side. So my balance in my accounts payable account is 2,800. Common stock, I have 21.6. Dividends, I have 4,200. Nothing in retained earnings. For service revenue, I have, let's see, 0, it's 8, 15, 23, 2, 8, 9, and 5 is 14, 14,300 in my service revenue account. My salary expense, I have 4,700, and for my rent expense, I have 2,300. Okay, so these are the balances in my ledger accounts. Now, you can double check those balances with the amounts that you have in the solution, okay? And again, print out the solutions, look at them, as we're going along here. I mean, you do the problems yourself using the forms and this and that. Now you're watching this video for whatever reason. We'll have the homework there, because the homework is, the solution to the homework is, is what you should actually have for your books, okay? But right now, all I've done is I've created the balances in these ledger accounts. So in your 4-column ledger accounts, this should be, you should have 5,700 as your final balance in the cash, 5,800 for your receivables, okay, 1,400 for your supplies, and they're on the debit side, 14,600 on the debit side, your accounts payable, and so on and so forth. Right? So these are the balances in your accounts. Now, our instructions tell us, so we've just actually completed number 2. Okay, because it says post the transactions to the ledger using dates, account numbers, and posting references. Calculate the new balances at January 31st, 2014. So that's what we've just done. We've calculated the balances, and now we're ready to prepare a trial balance. Okay, so I'm actually going to pause here and pick up in the next video with the creation of the trial balance from those balances in the accounts. Okay.